Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, June 25th, 2021. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Right now, narrow trading range heading into the RTH Open, just 12 points of range right now. That is 28% of average range over the last 10 days. And over the last 5 days, beginning with last Friday into last Thursday, we've had increasing volatility, increasing price range. So this is much less than 28% of the 5-day 52-point average. So very, very narrow price action here at the highs. We began the week here with a rejection of the previous week's low price. That led to a quick return back to the midpoint and through it into the high, and we're now sitting at the high ever since. So at the moment we are currently at a bullish outside week up. We've had an ascending wedge develop here. We could be looking at an upside break fairly soon. Any push through 42.50 could be significant, as there's clear air above and could lead to the next key upside targets. Based off of this impulse sell-off here, we have a 100% target that takes us to 44.50. So this impulse sell-off back up to the mid gives us this month's key levels, including the 100% target at 44.50. Very soon we will have new pivots for the new month of trading in July. Any pullback in July could be an opportunity to complete that move. Alright, so let's take a look here at the NQ. Very similar to the ES, trading just 34% of ADR at these highs. So very narrow ranges at these highs. Look for further range-bound trading activity. Fade the edges with an upward bias. Upward bias means, generally speaking, we are trending up on a medium-term basis, on a short-term basis, and of course also on a long-term basis as well. So any pullback likely is an opportunity to buy it. Whether it's a deeper pullback, say into 14.2, that could provide a great continuation higher, or whether today remains a range-bound day and we see a failed new low and go next week. So right now, very good bullish continuation throughout the week, holding near highs. This market could stand to pull back a bit toward the 8-period average, but that's about it before we see another continuation higher. For this one, we're still looking at upside targets based off of the key range here into 14,487, very close to that one, and also the 15,073s. So down the road, for example, heading into next month with a higher value relationship, any pullback as deep as that could provide a continuation toward 15K by the end of July. So there is a swing idea to come. Alright, let's take a look here at crude oil. Right now, crude oil trading also within a narrow range, 47% of average. The 5 and 10 day split averages are basically the same, one penny apart at 164, 163. We're trading at 78% of average range right now, so again, fairly narrow, but still holding within these highs. This range right here we've talked about before. We knew things were picking up right here, and it led to a great breakout on the first wave. This whole move has happened throughout the month. Very similar to next month. We'll talk about the higher value relationship to come. That will be during the monthly market outlook. We'll discuss that very soon next week. A pullback into that pivot range provides an opportunity to defend and keep this thing going towards 76.72. which is a final 100% target from that key range right there, 76.72, and then a shot to see a continuation toward 80 by the end of the month. Could be a tremendous move here for this one next month. Alright, let's take a look now at gold futures. At the moment, gold is trading 50% of average range, just 17.4 points. We talked yesterday about the narrow 5-day range that is developed here. 3 of the last 4 days have been compression days on a single day split, but if we look at this on a 6-day look, now we're getting the current day including the previous 5 days, and you can see how compressed it is. Just 36.7 points, 38% of ADR. Remember, that 36.7 points comes from the first day in that range. So very, very narrow price action. A move that could be upwards of 100 plus points of range could be ahead, as 117.8 is the upper red dot. When you do have compression there, that dot tends to drop until you do hit that expansion. So that dot could drop a bit, and we could be looking at somewhere between 80 and 100 points of range easily. Which way do we go? You know, we're holding a significant level, 1760, right? We're on top of that zone, just like we were last time over here, and it broke to the upside. It's going to take a transitional type of day, stop run day up, to really trigger this thing back up and retest the FOMC key level. One thing to watch out for would be any drop first, because that could lead to some sort of failed low, similar to that one there, that day there, and then that could be the low before this thing returns back to the FOMC key level at 1863. Now, if there's a failure to hold 1760, we drop and we're failing, there could be a pretty fast rotation back to lower FOMC key levels, or perhaps back across the next D-shaped profile with 1675 down below. Alright, that is it for now. We'll see how this plays out heading into the rest of the weekend. Happy Friday. Please be sure to like, share, and subscribe. And I look forward to seeing you in the trading room. Take care.